Let me quickly talk to you about filing S corporation taxes for the first time this year. So if this is your first time filing taxes for your S corporation, I want you to stick around till the end because I will be explaining a lot of things to you that will be really helpful in when it comes to filing your taxes. So don't you go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee, or tea, or vodka. Now let's roll. In today's conversation, we want to address one specific issue. How do you file S corporation taxes for the first time this year? Before I get into the nitty-gritty, it's important to understand S corporation 101. What is it? An S corporation is a business structure that is permitted under the tax code to pass its taxable income, credits, deductions, and losses directly to its shareholders. That means what? It means that as an S corporation, you're not paying taxes at the company level, but you are a pass-through entity. You are basically passing over those items to the members, to the shareholders who will have to pay taxes on their own 1040s. Okay, so an S corporation is actually an alternative to the limited liability company, the LLC. So both S corps and LLCs are known as pass-through entities because, again, they pay no corporate taxes, but instead pay their shareholders who are responsible for the taxes due. This is really important. And so what are the IRS requirements for an S corporation? Those are really important. So to qualify for S corporation status, a business has to meet certain IRS requirements. It has to be incorporated domestically, in other words, within the United States, have only one class of stock, and not have more than 100 shareholders. In addition, these shareholders must meet certain eligibility requirements, which means that they must be individuals, specific trusts and estates, or certain tax-exempt organizations. Okay, partnerships, corporations, and non-resident aliens cannot qualify as eligible shareholders. So this is really, really important that you really understand that. Let me dig a little deeper because I really want everybody to be on the same page here. So who can be an S corporation shareholder? There's a long list. So you got to be a U.S. citizen or a permanent resident. If you are a single member LLC that is owned by U.S. citizens or permanent resident, you can qualify. Certain trusts under subchapter S, certain voting trust, will created testamentary trust, grantor trust, bankruptcy trust, estate created revocable trust, and certain exempt organizations. The following individuals and entities may not own shares in an S corporation: non-resident aliens, partnerships, C corporations, LLCs with more than one member, in other words, multi-member LLCs, limited liability partnerships, LLPs, foreign trust, individual retirement accounts, IRAs, and business trust. Let me talk to you about the election. How do you actually elect for it? How do you elect S corporation tax status? Now, to file for S corporation status, in other words, to elect S corporation status, your business must first be incorporated as a regular C corporation or have filed for LLC status. This is really important because a lot of folks get it wrong. See, S corporation is not a regular designation. It is only a tax designation. What I'm trying to say here is that S corporation, if you were trying to incorporate today, you were trying to open a business, you can apply, you can register your business as a C Corp, but you cannot register as an S Corp. The S Corp concept only applies within tax matters. You cannot incorporate as an S Corp. So if you are electing S corporation status as a C corporation, you must submit Form 2553. Okay, this is a form that we have reviewed on other shows. So the form is pretty simple. It's called Election by a Small Business Corporation. So you got to actually submit this form to the IRS. And the form has to be signed by all of your company's shareholders. And if you are electing S corporation status as an LLC, you need to file the same form, 2553. So 2553 is really important when it comes to electing S corporation status. And number 3, you need to think about taxation. So how are S corporation taxed? Well, as I've said this before, and this is really important, S corporations are pass-through entities, which means they never pay taxes at the company level, which is different from what C corporations do. Right? C corporations have to pay taxes at the business level, which is why C corporations, when we talk about C corporations, we talk about double taxation. Okay, and so, but S corporation never pay taxes. Now, S corporation avoid this business tax by passing their income through to their business owners directly as reported on a Schedule K1. Okay, this is important. So so an S corporation, you have to file Form 1120S, but this is an information only return. So the information you have on the S corporation form, you have to take that and actually distribute it, quote unquote, distribute it proportionally to the shareholders. Speaking of shareholders, let's really talk a little bit about what you need to do. If this is your first time filing taxes for your S corporation, please make sure that you need to communicate with your S corporation shareholders so they know what's up with tax matters. Very important. See, the IRS is really adamant at making sure that S corporation shareholders follow the law, and there have been historically more audits in that department than when it comes to S corporation than when it comes to LLCs or LPs for that matter. So you need to communicate the business strategy clearly and frequently. What I'm trying to say here is that when it comes to tax matters, you got to tell the shareholders, if you are a single shareholder S corporation, then it's fine. In other words, if you are one person S corporation, then you're talking to yourself. But when you speak to multiple shareholders, when you have several shareholders for your S corporation, you need to actually communicate the business strategy clearly and frequently so that when it comes to tax time, everybody knows. When it comes to actually filing taxes, everybody knows what to put on their taxes. Okay, you need to provide relevant, accurate, and timely company information. The IRS wants you to do that. The IRS wants you to inform the shareholders properly. You need to adapt a strategy of full disclosure here, not only for tax matters, but also when it comes to accounting and financial accounting and reporting. Okay, set realistic, measurable communication goals tied to the company performance. This is really important. You want to build relationships with your stakeholders, with the company's stakeholders, and you want to establish a crisis communication plan. So what I'm trying to tell you here is that when you deal with S corporation shareholders and you need to inform them of what's really happening when it comes to filing taxes for the very first year, you got to have a plan. You got to have a strategy. You can't just be doing things randomly. No, the IRS wants you to follow a specific method when you communicate with the shareholders so that at the end, when they file their own schedules K1, and in addition to their schedule to their 1040 form, the task is a lot easier for the IRS. So communication with S corporation shareholders when you are not a single shareholder S Corp is really, really critical. Next, I want you to think about the paperwork. So we are still having a conversation about first-time filers, S corporation, and it's important for you to gather important records. This is important, especially because this is your first time, and first impression always are important. You want to project the right kind of impression to the IRS so that they know that your business is for real, your business is seriously complying with the law when it comes to filing taxes. Okay, so the records and documents that you need to have include business formation documents. In other words, are you a C corporation at the state level or an LLC? So your business formation documents will actually clarify this aspect of things. You need to have your tax returns and supporting documents. So if this is your first time, so you don't have any 1120S to file, but you have a personal income taxes. So you want to have your personal income taxes and your tax returns and supporting documents. You got to have your employment records, your sales receipts, okay, your business asset records. Now, all of these things, you don't have to send this to the IRS. No, you are gathering this for the accountant or the CPA, the regular accountant, the CPA, the enrolled agent, or the tax attorney who's going to do your taxes. And even if you have to do your taxes yourself, you still need to gather these documents so you have access to everything you need to be able to actually file your taxes accurately. So we're speaking about business asset records. We're speaking about ledgers and registers. Okay, this is important. Leases or mortgage documents, shareholder meeting minutes, bank and credit card statements, licenses and permits are very important also. Insurance policies and records, and loan documents. So the thing here is that you have a constellation of documents that you got to have to make sure that you will, whatever number you actually put on your tax return is actually accurate. Remember that Form 1120S, which you file with your S corporation, this is an information only return. The IRS is not going to look at that and just to make a determination as to how much you actually own in taxes. No, they will try to reconcile your amount that you have put on your Form 1120S. Remember, the thing here is that you're not filing. See, when we talk about Form 1120S, this is an information only return. But the thing is, the constellation of documents that you have here, you have to provide those documents to the accountant, to the regular accountant, to the CPA, to the EA, to the enrolled agent, to the tax attorney who's going to do your taxes in the end. Okay, so Form 1120S is an information return, but you are providing data for the accountant to do their work and tell the IRS how much the company has earned during the year and how much each individual shareholder will have to report on his or her Schedule K1. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about filing S corporation taxes for the first time this year. And so let's talk about the actual filing of the form. So how do you file taxes as an S corporation? So everything starts with the Form 1120S. Okay, this is the tax form that S corporations and LLCs filing a S corps use to file their federal income tax return. Okay, so when you think about Form 1120S, you have to think about a 5-page form from the IRS. Okay, so you have to provide a couple of informations. We have covered 1120S at length on another show, so I'm not really going to go deep here. But if you have any questions, please feel free to drop the questions below, and we'll certainly get back to you. And you can put the questions in the comment section, or as usual, people always email us privately. You can do that also, and we can also just get back to you. Remember, you need to provide on Form 1120S general information about your business, including your date of incorporation and the date you elected S corporation status on Form 2553 that I just spoke about earlier. You got to include your business activity code and your EIN, so your employer identification number. You got to have a profit and loss and a balance sheet for your business. So those are primary pieces of information that you would need to be able to fill out the Form 1120S. Okay, and so before you jump into the form itself, you need to also have additional items handy. So your date of incorporation, a list of your products or services, because the IRS wants to have a clear idea of what kind of sector you're in, what you do as a business, your business activity code, your EIN. I just spoke about that. And so the date you elected S corporation status is important. Why? Because this will be January 1st. If your business operates on a calendar year basis, it will be on the first day of your fiscal year if you operate on a fiscal year basis. The reason is important because the due date for your tax return will be 75 days after the close of your fiscal year. So if your fiscal year closes on December 31st, then S corporation will be due on your tax return for your S corporation will be due March 15th. Okay, and you also need to think about your accounting method. You will indicate on the form whether you use cash or accrual accounting, and you also need to put independent contract payments. So any payments to independent contractors totaling at least $600 for the year will need to be reported on the form, and you must also provide contractors with forms 1099. Before I close to this conversation, let's talk about compliance, which is quite essential. So, when is the deadline for your S corporation for filing your S corporation taxes? I just said it, March 15th. Okay, it's always 75 days after the close of your fiscal year. And remember, you can also apply for a 6-month extension by filing Form 7004. And you can file both forms electronically or by mail. It's totally up to you. And the cool thing is, when we speak about S corporation taxes, remember, you have a few advantages. You have no double taxation, unlike C corporations. You have no self-employment taxes. Okay, unlike owners of sole proprietorships, partnerships, and LLCs. S corporation owners only pay self-employment taxes on their wages instead of on their entire share of the company's profit. All other income is paid to shareholders in the form of quote-unquote distributions that are not subject to self-employment tax, which makes S corporation status very attractive to many small businesses. Okay, and remember that when we speak about compliance, you got to think about also the sales taxes, not the sales tax, the state taxes, state income taxes, because your business must be incorporated or must be organized in a state, and that state may or may not have rules for S corporations. Remember that S corporations actually is a construct that you only see at the federal level with the IRS. It is a construct that the IRS came up with. So maybe there could be different strategies or different plans or different laws and directives and regulations at the state level. Okay, so for all intents and purposes, please contact your state authorities, or even better, just have access to just talk to a local CPA or local tax professional, an EA, a tax attorney, and so that they can explain to you how things work. When we speak about getting an expert on board, when I talk about getting a CPA, an EA, or a tax attorney, that person does not have to be certified. No. However, it helps a lot, especially if you have to deal with the IRS. They want to have people who have designations. Okay, and so the question is, should you elect S corporation status? It really depends. Generally speaking, the decision should come down to whether or not you plan on taking profits out of your business or reinvesting them into your business. Okay, so filing as an S corporation can lower your tax bill if you or any other owner plan on taking profits out of the company in the form of distributions. Okay, it's important. So if you are a new and growing business and you intend to reinvest most of your profits back into the business, on the other hand, sticking to C corporation status can leave you with a lower tax bill. And how do S corporation taxes really work? Because this is a question that we have gotten from a lot of our viewers. So we want to clarify that thing. So you don't pay taxes at the S corporation level. No. And this is really what it is. So basically, you file Form 1120S. And 1120S, make sure that you put all your financial data on the form. And what will happen here is that on the Form 1120S, you will calculate how much money your S corporation made for this year. So you start with the regular items, so your revenue, right? And you end with your net income. And what will happen here, let's say you made $100,000 this year, and you have 4 shareholders who actually share equally in the profits. So what will happen here is that you will have to split that 100 grand in 25 grand each, and you have to create 4 schedules K1. and you have to send those 4 schedules K1 to all the 4 shareholders respectively. And you will include on that schedule 1 their share of the profit of the company's profits. Okay, remember, you need to actually distribute schedules K1 after you sent the form 1120S to the IRS. Actually, you sent both forms, the form 1120S and the schedules K1 to the IRS, but you have to have another copy that you can distribute to the shareholders. What we have seen in real life is that some shareholders also want to see the actual Form 1120S that was filed with the IRS so that they have a better way of reconciling their own record with the official records, okay? And don't forget that you need to file Form 1040 later on, because if you are a shareholder in an S corporation, once you get your Schedule K1, you're going to have to include that information actually on your 1040. Okay, now you might have other schedules. Sometimes you can actually have a Schedule E, which is a catch-all form for supplemental income. You might have to have Schedule 1, which is a summary of Schedule E and other adjustable to income. So the additional schedules that you might need for your taxes depend on your situation. It depends on the kind of transactions that you got into during the year. Thank you so much for your attention. So this was the end of our video on filing taxes for your S corporation for the first time. So I gave you an overview. We spoke about the election, the taxation, the shareholders, the paperwork you need to gather, the filing process, and the compliance. Thank you so much for your attention. I'll speak to you another time, but until then, remember, stay marvelous.